Hi, Mark Rogers here. We've had some exciting times, and I really want you to know what's going on here that you can take advantage of it. Let's get right into where we are in 2024. First off, the risks are real this year. We have an election year this year, and frankly, if you've been tasting the inflation risk going on, this has been a real thing for the last 6 months, that is. And it's a real concern for retirees as we move forward as to how much inflation risk can our retirement savings take on for years to come. Of course, market volatility risk in terms of being able to be in a presidential election year. How will the markets perform? Who knows? But your retirement savings still might be vulnerable to market volatility. Interest rate risk, we're going to talk a little bit about that in just a second here. It can actually play to your advantage right now. Long-term care risk. This is something still, it's growing in the back of people's minds as to what's going on. We really got to be concerned with this rising healthcare expense. Lastly, longevity risk, huge. If you're living into your late 80s, into your 90s, this is where everybody's wondering, will my money last? So with that, let's get right on into what is hot. Fixed rates are highest that we've seen in a long time. Insurance companies are being very aggressive with these, and there's bonus rates involved as well. Some annuities are throwing money on this to advance the savings as well in the form of a bonus. And again, look at the details as to what that is. And then, of course, growth indexed rates. The S&P 500 caps are high. The participation rates are great. And there's a lot of offerings right now on the growth side in terms of keeping our retirement savings safe and moving forward and really giving us a real punch to get our money to do something. But let's jump on the other side of annuities here. Income annuities, the bonus rates are applying over there as well. So again, you put some money in and they're throwing more money at it to bonus that up. We want to let it sit for a while. The income roll-ups are allowing you to sit on the money, and then that's rolling up year over year, guaranteed. And this is where people feel very happy to say, I want this thing to grow, and I want to take income on this here in about 7 years, 10 years, whatever it may be, and having at least a guaranteed roll up on my money. So when I take income, it's at a higher rate, guaranteed no matter what. Lastly, income distribution rates. This is something that if you have your money on the market, that's a concern. Do I do it at a 3% rate every year? Do I do it at a 4% rate? Well, guess what? The insurance companies have it at a higher rate. You want to check it to see, is it more like 5 or 6% or 7% if we're older? Is this a real thing here for our income distribution rates? So with that, let's keep on moving and let's talk a little bit about growth annuities going on right now. Here's a growth annuity, and let's say we put in $100,000 here into a growth annuities, and these things are growing at a tremendous rate right now, where on a fixed rate, you might be seeing something in the magnitude of 5 to 6% right now. And so this is going to be compounding over the course of time. And so whatever that number is, we can guarantee the fact that in the course of 2 years, 3 years, 4 years, 5 years, or even 10 years, your account is going to grow on a guaranteed basis. But that's not everything. There are indexed accounts as well. And so if the S&P 500 is doing this over the course of time, recognize the fact that you're going to get some of that growth. And then when the market goes down, you're going to plateau and not make anything, but you're not losing money in the market as well. You're going to get the next market gain. And so your principal with an index account can do something like this over the course of time. This is what they call sleep insurance. This means that we're able to grow our money and sleep along the way because we're not concerned about Wall Street. And so this is what we call indexing over here. And then this is what we call a fixed rate over here. Again, both of these are highest that they have been. Tremendous opportunities along the way here to take advantage of. The long-term care expenses are a concern for people. And so some people are taking, if you're in their late 60s or sometimes in your 70s, you say, you know what, this is a real expense. And so you carve off some amount of your retirement savings. And I've had people say, oh, I have this in a bank CD, I have it in a money market or whatever it is. and I want to designate that for long-term care. You go ahead and bring off and portion off some money, then they're going to give you 125% of whatever that value is for long-term care, or it could be 150%. It could be whatever. And the point of this is there is the opportunity to also pull the money out tax-free based on the Pension Protection Act. It's an IRS designation on some annuities, not all annuities, but some annuities. And so some people are really looking forward to having this money pull out tax-free for long-term care expenses. But you may say, hey, Mark, what if I pass away suddenly? Well, guess what? This is going to go to your heirs, all right? Or you could go ahead and cash it out later down the road. So there is a lot of opportunities with long-term care annuities. They become more pervasive more than ever before. It's a real concern. And if you're planning ahead, carving off a little bit of this could be a very helpful thing to do. So lastly, we have something called income annuities. And so this is where someone's retirement savings is sitting here. Maybe you have 200,000 here. Maybe you have 300,000. Maybe you have 500,000 right here. And you're saying, okay, so I have my Social Security going up over the course of time, right? This is my Social Security income on the course of time, but my expenses every month are sitting right here. These are my monthly living expenses. This is everything that makes my life go round, and I have a gap sitting here. And so the question is, well, Mark, what kind of guaranteed income can we do? Well, like I said before, these companies are putting cash bonuses in here too, so that's something to look at. And then they're also enhancing the distribution rate. So what I say by that is, sometimes the distribution rate is 4%, but now we're starting to see a lot of 5%. We're seeing 6%. That means that's the percentage that you're going to pull out of that account for the rest of your life, guaranteed never to run out based upon an income rider, okay? And so that's where we're able to take an account and say, okay, well, guess what? We're going to go ahead and create more income on top of my Social Security, going to cover those monthly expenses guaranteed moving forward. And there are ways that we can actually have that in an increasing income basis as well. Lots of power going on right now in the income annuities. So I hope that helps give a little high-level overview. I'm so much into educating, and I wanted you to know, because it's not fair if you don't know how to build more security and control into retirement, especially in this year that we're in, where it could have some potential problems coming down the road. But more importantly, since there's such great opportunity the insurance companies are offering, that this is not going to be on the plate forever, because this is very much interest driven right now. So mortgages right now, as you know, mortgage rates have gone up, and so therefore mortgage sales and housing sales have gone down. But in the insurance industry, insurance companies look at it the opposite. So interest rates are up right now, and annuity companies are offering tremendous opportunities, but it's not guaranteed to go on forever. In fact, I get emails coming through that these rates are coming off, products are going to have lower rates. So really, if you want to get some answers going on, it's time to set a 25-minute phone call with me. I make it very easy. We can talk a little bit about questions. Maybe you got some simple questions going on. Everybody is different. And I just want to find out, how can I help you best? Now, some people want to engage and say, you know what, I like your free report. I got an income report that I can crank around very easily for you as well, to do some analysis to find out where do we run out of money in a perfect world. So that may be something that it is, but if it's just a quick call, let's just make it a quick call. I do have the resources down below to set time on my calendar. If you don't want to do that, you see the phone number on the screen as well. And so I do work off the calendar. The calendar is the best way, but certainly feel free to leave me a message. If you would like, you can sign up for the email list as well. I am dropping videos like this along the way, educational videos. You can find me over on Facebook and YouTube at Safe Money Matters as well. So go ahead and jump over there, like, subscribe to Safe Money Matters with Mark Rogers. So with that, I'm signing off and looking forward to helping retirees as we look to build our retirement savings and maximize it with what's going on right now so we can build more security and control in a retirement and float through whatever's coming down the pike in our presidential year with our inflation rates going on. Oh, by the way, most people are turning 65 this year, and it's going to cause real stress on the economy with so many people turning 65. So security and control is going to be a big thing moving forward. With that, if I can help answer questions, love to do it. Talk to you soon.